What's up, everybody? So I've been thinking about this for a minute, and I just made a post on Facebook, and this needed to be put into a video. One of the biggest mistakes that I see home buyers making, especially when I work with them or I see the other side of the deal as a real estate agent and as a real estate investor, one of the biggest mistakes I see is something I want to talk about in this video. And if you stick to the end, I'm going to give you my personal thoughts on my home and why I bought what I bought and how I bought it. So I hope this all makes sense, and I hope this helps you in your financial journey. But here we go. I'm going to talk about it. The biggest mistake I see homeowners making right off the bat when buying a house. Here we go. What's up, everybody? So my name is Jack. I have this world of Jack Motley. I do entrepreneurial investing. I do vlogging. I do just about everything in my life, and really whatever Jack Motley's thinking about it at that time. And on this one, I see this problem happen a lot with my friends, my clients, and it's really buying too much house. Let me explain, okay? When you go through the house buying process, the lender, the mortgage broker, the mortgage guy or girl that you go to get your loan, if you're not paying cash, will basically approve you for whatever the max is that they can approve you for. And let me say this. The mortgage broker, the lender, the bank, the real estate agent, they're not going to tell you this stuff because they want you to buy the most expensive house that you can afford, because they're incentivized with a commission and a percentage for selling you the biggest house that you possibly could get. But is it the smartest thing to do? No. With Dave Ramsey on a lot of this stuff is that it is it is not a good spot for you to be in if that's not the size house that you want. You cannot get around this formula. $1 per square foot per year is how much maintenance you're going to have to do on a house. 2,000 square feet, $2,000 a year. Go on and write it off. That's what the formula is that we use as investors when we're looking at a rental property and the maintenance costs on that property for upkeep for a given year, when we're looking on getting a return on a property. Your house is literally falling apart around you as it ages. You will find out as you pay for that mortgage that at the end of the 30 years, when you pay that house off, if it was not completely renovated when you bought it, but it is going to need a ton of renovation when you pay it off in that 30 years. And over the course of those years, you're going to probably pay for 2 roofs, because in the state of Florida right now, insurance company will not allow you to have a roof over 15 years for the most part. Your appliances are going to go bad every 10 years. You're going to have insurance, which in Florida right now is awful. Taxes, and the massive loan interest you're going to pay over that 30 years. So probably whatever your house is, double it, and that's going to be how much you're going to pay for the house over the 30 years. So you got to be prudent on a lot of these things and cognitive about it. The next ones are, you're going to have wear and tear on the house. Stuff, just floors walking back and forth. You're going to have an HVAC go out every 10 to 15 years. There's $8,000 or more. You're going to have a few plumbing issues. You're going to have to paint the house every probably few years just because dirt. There's going to be at least one oopsie, like a pipe bust or a floor getting flooded or a wall getting flooded or a mouse ate a wire and caught something on fire, or a grease fire because your wife decided to cook french fries and the grease fell over the stove, and it happened to be a gas stove and it caught on fire. There's going to be a lot of things. And another thing that nobody tells you about is landscaping. Okay, my lawnmower needs working on about every year, and it costs me, a good amount of money to make sure the flowers are good, cut the grass. The weed eater is going to break down twice. I'm going to need a chainsaw. I'm going to need a lot of tools to keep it up with. I'm going to spend money on just keeping my little yard up to date. There's going to be a limb that falls. There's going to be a tree that falls. There's going to be a stump that's going to be needing to be ground up. So you just got to be cognitive of a lot of these things when buying a house. As Dave Ramsey would say, a mortgage broker makes you broker, because if you buy a house with no money in the bank and you were approved by the lender and you were able to squeak by the insurance policy that you had to purchase, you get in the house after closing and the hot water heater goes out, the insurance company says you need a new roof in 30 days, or they're canceling you, and then the mortgage company is going to say, well, if you don't pay for the insurance, we're going to purchase it for you or foreclose. these are the things you got to really think about when you're buying a house. And I wanted to put this in a video because I see this on a daily basis. And I made a post of it on my personal page and on my real estate page. And it was getting a lot of traction, and it was getting a lot of back and forth on it. Because, you know, I made my debt-free video and, you know, everybody always says, oh, keep the mortgage, it's a good interest rate. If you lose your job, and no matter what your interest rate is, or you lose your ability to work, let's say you get sick, you get hurt, and you can't make that mortgage payment, most times in the next 60 days, they're going to take your house, okay? And having a paid for house for me has been the most important thing I've ever done. The peace of mind versus the interest you're paying, it does not even equal. And there's something that happens to your mindset when you pay off your house, where you know you have a place to sleep no matter what every night, and nobody can take it from you as long as you pay your taxes, is worth 10 times what that 3% interest rate is. When I think of when people tell me that, well, why would I pay it off at 3 when I could get 6 in the market? Well, the market's fallen 20% this year. Good luck with that. I have had my net worth exploded after I paid off my house. Why? Because my mind was not worried about paying down my loan or coming up with my mortgage payment. It was thinking about prosperity. It was thinking about becoming a better person. It was learning. It was putting my mindset on growing instead of standing still. Because what the financial gurus that, you know, the financial advisors that spill this stuff to you don't tell you about is the risk factor, okay? And that's what I was trying to get to is, you know, yeah, you know, 3%, 6%, this is what the math is. But what the risk is versus the peace of mind, the risk is you might not be able to get that extra 2% or 3% by investing, because the whole point of investing, the return you get is based upon the risk you take to get the return. So, you know, you always got to factor in risk. And that's why I think a lot of people miss what Dave Ramsey is saying. For the non-savvy or the moderately savvy investor that thinks they can hear a smart guy on the internet talk and, you know, that he's going to get this astronomical return, they're not factoring in the risk that is involved in losing it all, okay? And, you know, for the first part of your financial career, having very little debt is an easy recipe to get out of the rat race. And then once you're out of the rat race and all your house and your prosperity is paid for, then you can join the hyper risk environment that might propel you to the next level. But your place to sleep that night is still secure no matter what. I made an entire video on this, and I hope you go and watch that. Maybe I'll link it here or something. But I cannot press enough by saying that being house poor is tough. And every moment you have to work to pay for your house that you're trying to impress somebody that secretly probably doesn't like you or talks crap about you is doing yourself an injustice. Those people that are judging you in your life are not the ones going to work and spending their life on this planet, the precious time you have on this planet, to pay for something that you don't even need. I really believe most of the really big houses are marketed to us by bankers so they can have a really good banknote and get that percentage and those fees on selling those notes. I know I'm gonna get a lot of hate on that in the comment section, but I truly believe that. I personally bought a house that I could get some sweat equity in, that I had a set of skills of renovating houses, and I bought it really cheap. Bought it for $67,000. It had a floor that was missing in it and a hot water heater through the floor, and it needed things, but I knew that I could fix them. And we got to work to fix them. I made a few videos on it. Check those out. And by the time I got done and the housing market exploded, now it's worth, you know, close to $400,000. And the amount of equity I was built in, I paid it off. I had the cash to purchase the house and pay it off and renovate it. And it was the smartest thing I ever did. And now I don't have to worry about a banker sending me a nasty gram, the insurance company jacking up my insurance rate, because of some old wiring or a roof they didn't approve for, I can just tell them, you know what, I'll self-insure it. Go do whatever you got to do. I'll be you drinking a margarita in the backyard. That has, I mean, one of my neighbors' insurance went from $2,000 to $5,000 a year. Another one went from $2,000 to $6,000 a year. And when you realize an insurance company can do that to you, and oh, those solar panels you have on the house, we're not going to insure those. So, or it's going to be $10,000 a year for the insurance. What do you do with that? Okay. So those are the things when you don't have a mortgage company on top of you that you can just breathe easy on. And I hope this helps. You can go and check out the post that I made on my personal page, Jack Motley, and see, you know, how I kind of wrote it out. But these things are what it costs to have a home or a house. It's the cost of home ownership. They don't tell you about it when you purchase it. See, a lot of people buy a house, no money down, very little money in their account. They buy the house and then they're house poor and they can't afford to live life, go out and eat, go to baseball practice, go on that family vacation because their mortgage is so big after they escrow in their insurance and their taxes and all that. And, you know, for me, house at $67,000 with, you know, a homestead exemption and all that, all the exemptions I have, my taxes are like $300 a year. And that is amazing to me. And in retirement, I can afford that indefinitely because you got to think about that. In retirement, a house gets really expensive. My mom's finding that out now between roofs and renovation and wiring and everything that was neglected for 30 years. So I know it's really hard to find houses that cheap anymore. It's really, you know, in the market we're in right now, that finding a house that you can build some sweat equity into, you can get at a discount price because maybe it needs some flooring or some minor cosmetic work. You're able to get into it cheaper, and you're able to fix some things to make sure your insurance isn't too expensive, and making sure you got all the tax deductions on your property taxes that you possibly can. So when you escrow it, it's not quite as expensive. I mean, buying a new build at the top of the market with, you know, in a okay neighborhood is just a situation for disaster. Don't let any of the people out there, professionals, get you out of your budget. Make sure you have a budget. Make sure you stick to that budget. Make sure you factored in all these things. And when you get your home inspection report, make sure that the wiring is up to date. Make sure the roof is up to date. You know, fairly new. It's got some time on it. Make sure your piping has got, you know, it's not galvanized junk. Make sure it's modern piping. Make sure your septic and sewer are good to go, and your HVAC is fairly new. And you should be covered on most things. Just keep these things in mind when you're going to buy. So I hope that helps. I hope maybe this helps somebody out there. Comment down below if you have any input on this, and I'll see you on the next video. I just really wanted to put this out there. See you later.